Hi, I'm Jason Jessup, and I'm the CEO of Magna Mining. Magna is a Sudbury-focused nickel-copper PGM exploration development company, and our flagship asset is the Shakespeare Project, which is a past-producing open-pit mine that has major permits for the construction of a 4,500 ton per day open-pit mine mill and tailing storage facility.
Well, it was your flagship. It may no longer be the case. You're out there buying stuff up. So what can you tell us about the new deal?
We're extremely excited about announcing the signing of the definitive agreement to acquire Lonmin Canada and the Denison Project. You know, since the inception of Magna, we really wanted to create a hub and spoke production model. Shakespeare, with past production and the permits to build a mill and a feasibility study that was completed earlier this year, we think is the perfect hub for this hub and spoke production model. And the Denison project that's owned by Lonmin Canada, it is a perfect fit for that first spoke. So we're very excited about it. We think there's a lot of synergies with Shakespeare, and it is right in line with our strategy that we've had since inception of the company over 5 years ago.
Right, so you're raising a bit of money to do this. It's $20 million. It's a lot of money when you're sitting around $25 million market cap company. Markets are off at the moment, and no doubt this has been a long time in the planning. So, one, how do you feel about the price, and how do you contextualize that in the sense of the plan going forward to build scale, and also, do you know what you were getting? I mean, do you know precisely what you're getting?
So, a lot of questions there. So I'll try to start at the beginning. We feel that the price that was negotiated is a very fair price for the asset that we're acquiring and the company we're acquiring. We've done a lot of due diligence. This deal has taken us over a year from the start of getting into the data room, looking through the data, doing the work, negotiating the deal, and getting a definitive agreement signed. So a lot of work done on it, and we brought in a lot of experts to look at various technical due diligence. And so we do feel, we're quite confident and we know in what we're getting. With that, and as part of the closing and approvals from the TSX-V, we will need to release a 43101 compliant technical report. So that will be hopefully approved very shortly, and then we'll release that. So with that, I think it'll be quite evident of what we are buying and sort of the significance in what it could, potentially improve and combine with Shakespeare to create a much bigger combined nickel company in Sudbury.
Right, so we're talking about an updated resource, updated 43101 here, are we?
This would be for the Denison acquisition, or for the Lonmin acquisition. So Denison Project that we're acquiring, it had some historical resources. And this will be an updated resource that's compliant. It takes in the 90,000 meters of drilling that was completed by Lonmin Canada since about 2005, as well as the historic drilling from when Inco was operating the mine previous to closing in 2002.
Right. Okay. So, I know you're talking about an updated resource, an updated 43101. But what can you tell us about this historic data? What did you see? Because $20 million, which is like almost 100% of your market cap today, that's a big bet you're making there. So what's it based on?
Yeah, so my experience in Sudbury was with Inco originally, and then I worked for FNX Mining for 6 years. And for those listening that aren't familiar, FNX Mining had acquired 5 past producing operations from Inco, very similar to the Denison Project, or as it was referred to with Inco, the Crean Hill Mine. So with that, I understand these old Inco mines, what was mined, what wasn't, and how to move them forward towards a production. So we had a very good basis of understanding not just the geology, but just the context of Sudbury and these old mine restarts. With that in mind, as I just mentioned, there was 90,000 meters of historic drilling done by Lonmin, as well as a lot of work done by Inco. So we had a huge data set to go through. It took some time, but we did our internal resource modeling as part of our due diligence, and some of that's what's going to feed into this resource that will be coming out on Denison in the next, hopefully, few weeks. So we did see a lot of value there. In our press release, we did highlight some of the intersections that Lonmin had. So there is both a contact nickel copper deposit that has been defined, and largely from Inco drilling. With Lonmin, the deal they had with Vale was a 50-50 JV that they earned into prior to 2018. And Lonmin had the rights to any low sulfide PGM type deposits that were discovered. So that was the focus of this 90,000 meters of drilling. In 2018, both Vale and Lonmin decided this wasn't the best type of arrangement, and there was some negotiating done, and then Lonmin acquired 100% interest for all the metals at the Denison Project. But since then, there has been no drilling. So there's a lot of opportunity to expand on the nickel copper mineralization. But what Lonmin was very successful in doing is highlighting a couple keel zones that start at the contact where the nickel copper mineralization is, and then go back into the footwall. And these keel zones are very high grade in precious metals based on the intersections that we've seen. And some of these have lengths of 20, 30 meters, sometimes up to 40 meters at grades anywhere from 5 grams platinum, palladium plus gold up to more than 15 grams platinum, palladium plus gold with copper and nickel byproducts. So very interesting mineralization. We see a lot of opportunity to both expand on these keel zones that are high precious metals, as well as expanding on the nickel copper mineralization. And again, this mineralization starts at surface.
Right. Okay. So some good things in there. I think some things that probably need a little bit more explaining. So, the platinum, palladium, gold component with nickel and copper in there too. So it's a kind of polymetallic type conversation to me at the moment, which is people kind of get a little bit confused by. So are you a nickel company? I know you're doing this Spoken Hub thing, but are we chasing nickel here? Are we chasing nickel and copper? What are we after?
We're a Sudbury focused company. Sudbury is primarily nickel. And so we will, definitely increase significantly, over time, our nickel exposure and our nickel resources. And again, even at Shakespeare, we've had great success with that and some of our drilling in 2021. But Sudbury is a very exciting geological environment. And the last time investors really had some exposure to that was with FNX Mining, and FNX discovered these footwall zones that were not primary nickel deposits. For example, the Levack footwall at Levack mine, which was later renamed the Morrison deposit after Gordon Morrison, one of our advisors and former VPX at FNX. It was primarily a copper deposit that was very rich in copper and chalcopyrite mineralization, and with tremendous endowment of platinum, palladium, gold mineralization. So, we will take it all. And some of the footwall deposits are some of the most valuable rock that really you're ever going to see in mining. Some of these deposits, and even at the Levack footwall deposit, we mined 10% copper and 8 grams of PGMs and 1% nickel for months and months on end. So it can be very rich. So we will have lots of exposure to the typical Sudbury contact nickel, which has been the focus over the last 100 years by the majors. But these footwall deposits, which are often overlooked, we think there's great potential there. The low sulfide PGM keel zones that we're seeing at Crane Hill is a great evidence of that. We think there's a lot more of it. And much like what my experience in Sudbury has been, you can have one mine that is mining different styles of mineralization, different deposits at the same time. So you're mining the high grade nickel copper mineralization, as well as mining, maybe high PGM, more copper rich mineralization. So we're not going to say that we're only focused on nickel. We're a Sudbury focused company, and Sudbury has a lot of great deposits, and we think Crane Hill and the Denison Project is one of those.
Okay, so you need to help me here, because I think it's really important that people know what you are. You seem to be focused on the money. We'll take it all. I've no problem with that. In my concentrate, we'll take credits from wherever we can get credits, but also at the same time, you've got to be careful about the narrative into the marketplace, because people and we've seen this happen in precious metals, we've seen it with other kind of battery metals too, where companies are chasing high grade stuff, and then they suddenly realize actually there's a lot more pounds in the ground or a lot more ounces in the ground for the precious metal guys to be had, going after the lower grade stuff, right? And then that switcheroo in terms of strategy, in terms of narrative, confuses the market. So I'm sure you're conscious of that, but when you're starting off, you've made the choice to go after this deal because you think it's a good deal, and in the long run it'll be good value for money. But you may damage your brand, you may damage the story if you don't be clear, or if you aren't clear with the marketplace. I mean, do you subscribe to some of that or all of that?
I totally appreciate what you're getting at. I think, again, since inception of the company, we've said the same thing. We're a Sudbury-focused nickel copper PGM company. Most of our resources, most of the value we currently have at Shakespeare Project is in nickel, with some significant copper and PGM and gold byproducts. That will continue. So there's really no change in strategy. What we do think is with a project like Denison and Crean Hill, that we can add in some much higher grade mineralization based on what we've seen. So we think there's definitely that kind of potential, but it's going to be the same mix. There's going to be nickel, there's going to be copper, there's going to be platinum, palladium, gold. Again, Sudbury is very polymetallic, unlike some other nickel camps that are very much nickel with maybe a little bit of copper and cobalt byproduct. But we think having that polymetallic nature, having the ability to take advantage when there is runs in precious metals and have exposure to that as well is very advantageous. And I've seen that in the past, and I think it is a benefit for our company and for our shareholders.
Right. So Sudbury-based company, are you an exploration company then? I know this has produced in the past. The project has produced in the past, but are you still an exploration company trying to piece together a picture of how you could take advantage of the mill permit at some point, or is there some desire to actually get some revenue flowing sooner rather than later?
Yeah, that's a great question. And, we've always said we're an exploration and development company because Shakespeare is such an advanced asset, and having a feasibility study done on it, having past production technically de-risked, and having a significant resource already, it is, again, that we see as a perfect hub to develop a producing company. But now, obviously, there's some exploration potential that we see in the footwall, as well as in the contact at Denison, as well as at Shakespeare. So exploration will always be a very important part of our business. But that being said, we are looking at commissioning in the future, in the next 6 months, another study, probably a pre-feasibility study, to combine both Shakespeare and Denison, and so really demonstrate potential economics of what a combined those two projects could look like into a combined entity, and feed from Denison going into Shakespeare. Now, that being said, one of the other great things about Sudbury is there are 2 existing mills here in Sudbury that have capacity, are not completely full, and can potentially toll mill high-grade mineralization, high-grade ores from Denison. So that is something we will look at, and we think that is also supporting understanding, a pre-feasibility study, maybe getting in, doing some mining, and processing that to get better reconciliation against the block models, test metallurgy, and potentially produce some cash flow in the near term. So these are things we'll be working on over the coming months, and we'll be able to get better guidance on that as things evolve.
Right, but you will need to raise some capital against that as well, because you're going to need to get in a position to even do the tolling, right? So which is clearly reduces the capex component, but in terms of opex and maybe a little bit of capex in there too. So what's the timing on that? What are the kind of considerations when you're defining the scale at which you want to go?
Yeah, so one of the considerations in the financing that we announced with the signing of the definitive was a private placement up to $20 million. The purchase price on closing is $13 million. So, there's going to be some closing costs, but it still will allow us a decent amount of cash to run over the next year as we work on these studies, do some additional exploration, and then start looking at, what is the next step. And if it is an advanced exploration program with potentially bulk samples or some early mining, then that will be evolved. But over the next 12 months, We believe we'll have the cash in hand with what's in the bank currently, plus closing this private placement when we close that will be able to be funded over the next year.
Right, and you've done that at what, 27 cents? Is there a warrant with that?
Correct. Yeah, it's 27-cent unit with a half warrant at 40.5 cents for 3 years.
Right, so $35 today, because you saw a little bump there when you made the announcement as well. That kind of looks okay, not too expensive, and it's not at a discount. So that's kind of good news. I've got to ask about one of your shareholders, Mitsui. How do they feel about all of this, and do they get to partake in any way?
So the MOU that we announced with Mitsui, it was on the Shakespeare. Well, it was actually at the asset level for Shakespeare only. So now we are continuing to discuss how does this potentially impact Mitsui, and how can they potentially participate, and what that looks like. So there's quite a bit of work to do to put some values around it, and we're in discussions with them on that. So it will take a little bit of time for them to fully understand and for us to come to some kind of agreement or conclusion on that. But it is they're obviously very excited. A company the size of Mitsui is only interested in a company like Magna because they see this growth potential and potential even for further consolidation in the Sudbury camp.
Right, and so they currently have an option of going up to 25% from memory from our conversation at the beginning of the year. But what does it look like? I guess it looks like give us some more money and you can get involved. But what if they brought to the Shakespeare project today? Because obviously there was some money allocated to drilling and advancing that project. Have they got what they wanted or expected out of Shakespeare yet? Because I guess it's only been 6 months since we spoke.
Yeah, so their evaluation on Shakespeare and their due diligence is largely around the feasibility study that we released earlier this year, as well as looking at potential upside and expansion and future increases from that. So they're quite keen on the project, but as all of us would like to see, everyone wants to see it grow and extend the mine life, and so Denison is an obvious opportunity for that, as well as an updated resource one, combining all the drilling that we've done since the feasibility study. So yeah, long and short of it is, they're quite keen on moving forward with just Shakespeare alone, and they have a lot of interest in more upside with this Denison and Lonmin Canada acquisition. But again, it will take some time.
And if they did decide to go forward, would there be an expectation that they'd have to drop some more money in at asset level on the new project?
Yeah, that's a possibility, and this is what we're discussing, whether it's increasing exposure through Ursa Major, which is the subsidiary company that holds Shakespeare, and having potential Denison ore being toll milled through there, and then they benefit from the toll milling. There's a lot of moving parts that we're discussing and what might work best, but again, we need to focus on just getting this acquisition closed, and then we can have more fulsome conversations what a bigger picture would look like. But for right now, at the moment, we're still with the MOU, and that's where it's at.
Right. Okay. And with regards to on the new project, the infrastructure must be in place. Does it need some kind of updating, and is that factored into the raise that you've just done?
Sorry, infrastructure.
Well, I'm just talking. Yeah, I'm talking about on the new project. Obviously, it has been a mine before. A lot of money was spent on it, I should say, before. Does it need some updating, upgrading to allow any kind of trucking, for instance, to happen when you get to that point?
It's actually, there's great infrastructure there. There's power there. There's a water treatment plant. There's an ore pad. There's excellent road access. It's actually just a few kilometers from KGHM's big Victoria project that they're developing. So, and just down the road from Vale's Totten mine. So it's in a great area, very accessible. As to get started, the infrastructure is primarily there. We'll have to look at what long term is going to be required, but it is a very good asset and in good shape and been well maintained.
Right. Okay. And you've noticed that Jonathan Goodman's joined as well. Was that Was he part of this deal? Was that to give you access to market? I mean, why bring him on board? Apart from he was a big shareholder through Dundee previously.
Yeah, so Jonathan Goodman has been a big supporter since our RTO, and in his earned into or bought into approximately 19.9% interest. And as part of looking at this transaction, we wall crossed him and brought him in as part of our due diligence. He actually brought his technical team into the data room, and they did their own due diligence on it. And needless to say, Jonathan was very excited and really wanted to help us both close this acquisition and grow the company towards our goal of becoming a producer with the hub and spoke production model. So with all of that, it just made a lot of sense to bring him onto the board. So we asked him to join the board, and he graciously accepted and has been a strong supporter ever since.
Fantastic. And you're obviously at the conference now. You've been meeting people yesterday, and I guess another couple of days worth of that. What sort of discussions are you having? I mean, who's interested in it? Is it just your current shareholders? Because at a company of your size, institutional guys and the kind of bigger companies do tend to stay away from that. But with Mitsui on board, has that helped somewhat?
Yeah, I would say that our shareholder base, once we close this $20 million private placement, will grow, and we'll bring in some very significant new shareholders. And some of these are very good, well-known institutional shareholders. So there's been a great response. Now, in order to do that, we had to wall cross certain groups and to get the financing in place. But a lot of support, a lot of new shareholders, and we're getting inbounds and interest from a lot of groups that I thought were too big for us, but they like what they're seeing. They like the pattern, and some of them have had success in the past with juniors in Sudbury, such as FNX. So they're quite keen to hear more about what we're doing. So we've had some very good discussions with some top-notch shareholders and potential investors.
Brilliant. And last time we talked, obviously, nickel was just on a tear again. It's come off a little bit like most things. Your expectation, or certainly I'd be intrigued to see what some of the conversations that you've had or expect to have will be about as it concerns to the market, right? Is nickel going to come back, or have we seen that its best days behind us?
Our best days are definitely not behind us. I think that the nickel market, if we really look at it, and I watch the warehouse and the LME stocks, and anyone who takes a look at that, regardless, don't even look at the nickel price, but the stocks keep ticking down, steadily ticking down. And we are at lows that I don't even recall if we got to those lows back in 2007 when nickel was over $20. So inventories are very low, and everyone can agree that demand, especially in the battery space, which is the class 1 nickel, the high purity nickel that can go into battery materials, is definitely going to grow in demand. So as demand grows, inventories have come down. I think there's no way for nickel to go but up in price, and there will be some volatility. I think there'll be times it'll probably take another run where it'll shoot up too far and then come back down and then shoot up again. But overall, I think the supply demand is dictating that nickel can only increase in price, but expect some volatility. That's what I see. But I'm quite excited about it, and I think we really do need higher nickel prices to incentivize some of these big, very large capex projects to get built, and that is what we need to meet the demands of what we're seeing.
And people who say it's being designed out of car batteries, what do you say to them?
I don't think so. There will be some opportunities for other chemistries, but I think the big automobile manufacturers have set a path forward that they are going to be using, high nickel content batteries, and maybe in 10 years there'll be a different chemistry that'll be adopted, but it's not going to be in the next 4 to 5 years. That is for sure. So I do see nickel being dominant, and one of the big hurdles that we need for EV adoption is this range anxiety. People need to see the ranges increase, and the best way to do that is putting more nickel in batteries. So I'm a strong believer that we're going to see this high nickel content chemistry over the next 10 years being the dominant chemistry, and that's going to drive a lot of demand for nickel.
Jason, look, I know you've got a busy day ahead of you, so I'm going to let you go. Come back on when you've settled your discussions with the TSX over the resource numbers. We all want a sense of how big this thing could be, and we eagerly look forward to speaking to you soon. Thank you very much, sir.
Thanks a lot, Matt. Hope to speak to you in a few weeks. Take care.